Welcome to this week's Sunday Stock Talk. Hope you guys are all having a fantastic day today. In today's video, we are going to be talking about stocks that we're holding, stocks with opportunity. I always go into the week with some sort of game plan approach or at least some sort of watch list. So I'm not going into the week blind. So, this is my trading routine. So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. And if you guys want to learn more about trading and investing, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. We teach you how to find opportunity, how to find stocks, how to set up your scanners, how to build a trading strategy. So check it out down below, and you guys can get 51% off by using code SPRING25. So if you want to elevate your trading game at all, click that link, sign up, and I'll see you guys in there. And guys, let's jump into this. So like I said, I always imagine the week ahead, like a football team ready to go into the Super Bowl. And what I mean by that is they have an offense, a playbook, a defensive playbook, and a general game plan. You got to have that very, very similar approach when it comes to trading. Because if you don't, somebody else is, and you're gonna lose money. At the end of the day, every trader is competing against each other. You're competing against, entries and exits and all that stuff. So you have to have an edge. And even if it just makes you 1% better, for me, I'm willing to do that, right? If you are a trader and you're making just a whopping 3% per month, which may seem small, especially for a lot of new traders that don't have a lot of money, 3% per month puts you in the top 5% of all traders in the world. So, don't expect to get rich quick. Understand and do your trading routine, and you guys will be in a really, really good spot. All right. Enough with that. Let's jump into this. So the first thing that I do is I always look and I go through the stocks that we're holding or ETFs that we're holding. Now, the major approach that we are doing this week is very similar to last week. Averaging down ETFs, blue chip stocks, and then any trade we are going to be in and out of, right? Very, very quick. And the reason why is because of this, right? The Vanguard S&P, or just the S&P 500, really has seen huge sell-off. So right now the market's down about 12% from peak highs. At one point it was down about 21%. So that is considered a bear market, right? So for me, one of the things that I do as a trader is I average down VOO, I average down blue chip stocks. I also will average down ETFs. So with VOO, you guys can see this beautiful, beautiful trend line, which pretty much is a telltale sign of where to buy this ETF. So you guys can see it hits this trend line, buying pressure, hits it, buying pressure, buying pressure, buying pressure, buying pressure. So now if you're a new trader or new investor and you're nervous about where to get in on, throw an alert here at 442 and then just start averaging in, right? Buying consistently. What this does is as VOO sells off more, you move your average cost lower and lower and lower. And once it sells off to this trend line, you can put in more money. That's the approach that I do. I also will do this, the 6% rule, which pretty much states that if a stock or ETF sells off 6% in a given week, we'll double what we normally will put in. So with VOO, great trend line, we have our zone to really go heavy with. We're good to rock and roll. With Visa here, Visa we're up very, very well on. And the reason why is because the averaging down technique, right? Great breakout. Stock sold off again like crazy here. Great breakout. And it's slowly finding its new trend going up here, which is always good to see. Then we got QQQ, very similar approach, another ETF that carries a lot of potential here. We have a lot of huge icons: Apple, Microsoft, Nvidia, Amazon, and a lot of other ones here. So QQQ definitely adding, an averaging down here. Meta, very similar approach. Then we got MAGS, which is just the Magnificent 7 ETF here. This one here is starting to, do very, very well. We got in last week here around the $40 mark, and it's already up to 44. So moving and grooving. We're slowly thinning out our Google stock because this is the one position that we are down on. So, as this goes up, we're probably just going to start selling out. Hopefully we can get out for as little as we can. And Google, the reason why is because we started averaging down a little too soon. We started averaging down as the breakdown of the 90-day moving average line. So this is a huge, 2.5 month, decline of share price, which I should have waited for the breakdown, of, the 171 mark. But at the end of the day, not that big of a deal. Then we got Berkshire Hathaway stock sold off like crazy, hit that 200-day moving average line, which is a heavy support for the stock. Also, looking at that hourly, look at that trend line. That is absolutely beautiful. So now just riding that hourly trend going up. If it sells off down, to 514 and up, whatever it is. This one here actually looks really good. And one of the main reasons I like this is because of this new trend, right? We established that hard support there. That was our entry at 490. And with trading, right? People always ask, well, Carter, the lowest was 462. Well, yes, but we waited for a little move to go up for a confirmation of trend. Then we got Amazon averaging down here. All right, so these are all of the positions we are averaging down, which at the end of the day, it's not that big of a deal because people make it out to seem like traders, they have to, get rich quick and all this stuff. A lot of the positions were only up a little bit. This is our monthly overview here, and you guys can see that, we're down on Google. We were up on Maxwell. We took a nice trade on Root, which was just a day trade. So now with stocks with opportunity, and if you guys want this, right? If you guys want this digital trading journal, I'll put it down below. You guys can check it out. And if you guys are new to the channel, make sure you guys subscribe, like, and check out our school. Also, we do have new merch, which is super exciting. So I'll put that down below as well for you guys. But opportunity wise, we got TUYA here. And the reason why I threw this on watch is this trend. We could see a little buying pressure here. As you guys can see, it hit it in the past. Could see a move, from like $2 to like $3. Definitely high risk, high reward play. Given the market volatility, I'd be surprised if I ever took a trade on this. Then we got Tesla here. Tesla just has that huge zone of support here, as you guys can see. In that range there. So we'll see what happens with Tesla. RSI is a little high, but one that we could average down here. And you guys can see just the heavy zones of buying and heavy zones of selling. So ideally, we already have an alert set down here, near and around the 219 mark. Then we got Royal Caribbean here. Royal Caribbean is riding that new trend going up. So we could see a move from like 198 up to 208 for the breakout there. Then we got the Mags X, which is the Magnificent 7 leveraged ETF, which is just a double ETF leverage. So it's a little more risky. We could see a breakout here of this trend, which would be awesome here. We got Robinhood. Robinhood does look really, really good here. And the reason I like this is looking at that daily time frame. You guys can see we're approaching that breakout there, which does look pretty good. And it hit that 200-day moving average line. So it's approaching a move above all of the moving average lines. We got ERJ hit that beautiful trend line, as you guys can see. Hit it, buying pressure, hit it again, already moving its way up a little bit. We got DX here, which really we've traded in the past here. We were hoping for that resistant breakout, didn't happen. Then we got Apple here. One of the main reasons why Apple is on watch here is because there was a couple articles that did come out about possible tariff exemptions for electronics. So I want to keep this on watch and see how the market reacts to this on Friday, or on Monday, for a possible day trade to get in and out of this position. So we'll see what happens though. But that's the thing about trading. So what we kind of covered here: entries, some exits. If things go right, what are we going to do? If they go wrong, what are we going to do? Right? And just having a total game plan will help you make money as a trader. So guys, hope you guys all enjoyed this. If you did, smash that like button, subscribe. I'll see you guys in there. Hope you guys enjoyed it. Have a good one.